Welcome to Trading Lounge and the S&P 500 for the 18th of July, and starting on the daily chart here. So there's not a lot to add today, but we need to have a look at, we've got long position on, and so we should in a way too, you know. I mean, if you asked a 5-year-old which direction this market is going, they'll be looking at this and saying, well, it's going up. So, and that clarity is sometimes quite good. So we do have long trades on here for a couple of reasons. Well, first of all is that the trend is going up, not only the main trend here, but also this trend as well. And we also have got support on where the old resistance is here as well for this. However, at the same time, in terms of counting waves, which sometimes is easy and sometimes is tricky, but because we've got 5 waves here, then we're looking for another 5 waves over here for this. So it could collapse at this point, and it could collapse in 2 ways. So let's just go to the 4-hour chart here and look at this. So in this case here, we could look at it in terms of, well, wave 3 here, an A wave here, and a B wave here. We know that this is the high on the cash market, and if that's the high on the futures market, the high on the cash market, which would leave this as 1 and 2 and 3 and 4 and 5 on the cash market. So it's possible to have that 5, 3, 5 structure here and done and dusted here at this point. And as you know, we've been looking for 5 waves up in this space up here. It doesn't count very well. I know that we could count it as 1 and 2 here and 1 and 2 here and at first sight, but when you pull it apart, it doesn't really work like that. So we've got 1 and 2 in here and 3 here and an A and a B and a C for 4 here, and more like an expanded flat, and we're looking for 5 waves up here, and also 2 up here. It looks like 5 waves to this point here. Well, it's possible on the futures, but on the cash market, when we looked at it, we looked at that yesterday, so I won't go into that today. It counts as the top of a third, and we're looking for a 4th here, and then one more little move to the upside here. Now, we know that there's a couple of things here that stick out. First of all, we're at these old highs here, so we expect the market to be pushed around a little bit here, and it certainly was pushed around here and pushed back down here, even from this point and this point. But now it's got up here, and it's sat up here, and it's sitting on there as support, isn't it? So that's why we've gone long in here, and we'll put stops here now at quite close to where the market is at 3216, because if that's breached, then that structure is also invalidated at that point. Apart from that, we'll take a closer look at that, but the next point here is that based on this particular chart here, we could come down to the 50-60% retracement level down at 3100 and then move up off that point. So that's one thing that we need to watch, and that would be in a 3, 5, 5, 3, 5, an ABC zigzag pattern. So a 5, 3, 5 pattern here. It should be quite simple because it's a wave 2. Otherwise, we'll see 5 waves come down, much the same length as this here, back into the 3000 area through here, and then up. Yes, I am bullish overall in the market, and for good reason based on structure. But let's go in and have a little look at this here. Right, so we can we'll go back to our original B wave top here for this. So what we were looking at here was well, wave A down here, and then an A wave, a B wave here, and then 1 and 2 and 3 and 4 here, and going up for 5 here for that, and then we come down in 5 waves here. Not that it makes a big difference, but let's just drill in from this point here. So as I mentioned, we need to be flexible in terms of being bearish and bullish. That's not helping on the hourly chart, so we'll just go to the 15-minute, and then we'll go to the tick chart here as well. So just on this basis here, so from this wave 4 here, we're looking at wave 1 and 2 and 1 and 2 and 3 and 4 and 5. Now we've pulled that apart. I'm okay with that. I'm confident with that, and I can see we've got an A and a B and a C wave down through to here. I'm a little bit confused about this here. The cash market is a bit clearer if you look at the cash market with all of this. So the other point here that I want to make is that we had a long trade here, and I just want to use a bit of hindsight here as well, is that originally when we've got a top in the market like here, we use that as the trigger, and then we can bring it down on each sort of singular high, so to speak. So that means we could brought it right down to this one, but then you could have also brought it down to this one here, and then you could also bring it down to this one here, and then also to this one here as well, which is pretty much the same. It's not that we did that, but that's what we do. Okay, so I wasn't there to point that out. Hopefully I will be there to point that out at some point. I'm thinking of doing some sort of quick update after the Asian session has finished. So that will come in around the London opening. Yes, we do put charts up and so forth, but not video. So I'm thinking about doing a quick video around that time at the end of the Asian session. It's not much, you know, the European session, can be pushed around later on by the US session, of course, so things can get a bit different from that point. But I think it might be handy if I do a little update in the evenings, my time from Sydney anyway, and for that sort of after Asia finishes there. So where are we with this? I have to say that I find, as I mentioned, I found this all really quite messy in here for this, and so I'm not really sure which way to look at this. There's different ways to look at this. I know this is impulsive here. One of the things in here, there's some things I do know and some things I don't know, but basically I know the Nasdaq is struggling to push up. We know that this market is struggling to push up. It's just a struggle, but it is giving impulse waves to the upside here. So based on that, we have to stay in that direction. We always must stay with the 5-wave structures. So this is 5 waves here and a correction, another 5 here, so that's there. But what I wanted to say is that so here we've got just from this low here, we've got 1, 2, 3, 4, 5 here for 1 and 2 here. Then we've got 5 waves in this structure here, in a nutshell, of 1 and 2 here, and 3 and 4 and 5 here. Now I've got it as wave 3. Now that may not be the case. This may be wave 1 and 2, and then wave 1 and wave 2 here, right? And it is overlapping this, so it is weak. But our stop here is going under this point here for this. So that brings it down to, well, as I mentioned, at 16. So we're going to have it at 3, 2, 16 there for that. That's where the stop is going, and that's where it is on the 15-minute chart. And the reason for that is because we've got 5 waves here. So if those 5 waves are breached by a move back down here from that low, then this move to the upside crumbles at that point. So that's what we'll do there. This brings us pretty close to break even. Not quite, but good enough to leave it there for this particular situation as such. So yeah, look, that's kind of where we are really. If I just bring a bit more data in here, of course, as we do on the tick chart. So yeah, we're looking at 1 and 2 here, then 1, 2, 3, 4, 5, an A and a B and a C. And like I said, I haven't really got my head around all of this here, and I can count 5 waves down here, 1 and 2 and 3 and 4 and 5. So I'm happy to have that wave 4 there. But what I was sort of thinking, not that there's any of these have made a new low here, but some of them have got impulse waves down, like this is an impulse wave down here. And I think that's where the sort of the low on the NASI was on the 17th there. So that's why I've just got that there. But maybe this counts differently and not an A and a B and a C here. Maybe it's something, some sort of triangle pattern that finishes over here rather than here. But even so, I still can't, I can only understand some of this here. Anyway, that brings us, from what I do know, is that stop should go at 3 to 16 here for that. So I should just even bring that down there a tad. Anywhere close to 16 is fine, but under 1650, definitely under 1650. And to be honest, we could probably even go short at this point too if there's a breakdown in this. but it just doesn't seem finished to the upside. That's what bugs me, you know, and yet I don't understand some of this structure in here. But technically we should make a new high above here, or have 5 waves up in this structure, but it's difficult to count these 5 waves because I don't know what that is there. So we have to prepare. I mean, the other thing to do too is that, of course, is that the 3200 is the support. So if that becomes the retested resistance, then we also want to be, you know, we want to be on the short side from there as well. We can have a quick look at the Nasdaq. I mean, with the Nasdaq here, I know some folks have got from the top here have got this counted down as 3 waves, and sure, I can see that. But when I pull it apart and look at it on the cash market, it just counts down as 5 waves. This move up here counts as 3 waves, and it's pulled back to the 61.8%. And the interesting thing is here, this move down through here also counts as 5 waves down through here as well. So what I've done is, when we spoke last time, is I thought, well, can we move wave C to here? Can it be that short? Well, possibly as an A and a B and a C here. And we looked at that because we knew that the S&P was going to be moving up higher. But this is also struggling to move higher. This is group 2 here, so 65, 72 and 80. And it hasn't found support inside of group 2 yet. It's trying to find it at the 65 number here, the 10,650. But it hasn't got there yet. And if it does find support in there, well, that's great. But also too, at that particular price point there, because we've got 5 waves down here, I mean, this can be, if I got some stuff here, this can be down for 1 here too, and back for 2 here. So we've got 5 waves down here, we've got a corrective move back to 61.8%, we've got 5 waves down here, and we've got some sort of, you know, move in this space here also to the 61.8% or very close to it. So 61.8% on these highs here. so it could be in bearish mode. So that's why I've got that trade sitting here at 10,005, just under the 10,550 at that point. Now, this is also the NASI 100. So the Nasdaq comp is trading at a different price from this. So just be aware of that. We could also too, this would be an impulsive wave up here as well. So we could also grab this here and put that under here for a smaller position to go south here on this market. So, and then of course, anything under 500 as resistance, we could go there as well. So just looking at this into the tick chart here for the diehards. So as you know, I've taken all my labeling off here, but I have counted 5 waves down into this space here. So I'm okay with that. This is definitely an A and a B and 1 and 2 and 3 and 4 and 5 here. So this is definitely a corrective move here. So technically, being corrective, we should make a low below wave A here. And to support that, we have made 1 and 2 here, and 1, 2, 3, 4, 5 here for the 3rd and 4th and 5th. So this is a nice move to the downside in terms of looking for 5 waves. You know, this here, I've tried to look at it and see I've labelled it here as wave 1 here and wave 2 over here, and we've got our short trade coming in here for that. We just talked about that a little bit more just then, and this one's taking the short trade under the 600 here, and rightly so too, because the reason here is that we've got this impulse wave up here. So if that's breached, that equals the pretty much would equal the same thing as the S&P at 3216. So how to count this up here? I can see, I can tell that's well, actually, Yeah, we do have that extra wave there. So, I mean, it's a bit odd, but we could count this as 1 here and 2 here and 3 to here and 4 to here and 5 to here for that. So that would leave this here at, if it was going to move high, it's still safe. It's still safe at that point there, technically speaking. So we've come up a level because we're basically going to short before at be on the short side at 10,500. So what we've done now, we've moved up here. We can put this, won't move over because of the tick chart there, but we'll put this here at 600. So we could say here as a safe trade, if the 600 becomes the retested resistance, and we know it's the 61.8%, so we're going to see it come down, we're going to see it bounce back up here, and then eventually come down and find this as resistance and then drop, if it's going to go in that direction from that point. We're not trading it long at this stage. It's not something that I'm that interested in just yet for this, so I just want to see. We need to eliminate the bearish count here for this. And that's it, really. So, look, not a lot to report, but just wanted to really update on where to put the stop for the long trades here and at what point that we can also look to go short. But just to recap all of this, on the cash market, as yesterday, you have a look at that video, we counted 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 to here, and looking back for wave 4, we've got a nice support on 32, so as long as that holds, then we should make a new high up through this space here, and that's that. So just going back to the hourly chart or the 15-minute chart where we've had our trade sitting on. So we're long here and we've got our stop at this point now. So we always knew that this, this is just really shooting the breeze, something to do. This is not a fantastic trade setup by any means, It's just something, well, we're here, we might as well be doing something positive, but trading the fifth of the C wave up to this point here is not the done thing. Also, too, just to recap as well, is once this high comes into place here, and we've got that high wherever it be at the 50, or even a little bit higher here, wherever that high comes in, and then we get a pullback into this space here, then that becomes the catalyst and the trigger for the next position higher as well. So anything on that high or the next high, just in case we are in a bullish run, then we'll look at that point there. So yeah, let's see what Monday delivers. But normally where Friday closes, Monday will follow through. A bit like the weather from one day to the next. It's that sort of subtle change always going on. Alrighty, cheers.